So learning about Warren Buffett, and you look at his success, a lot of people contribute that to Benjamin Graham. Working with Benjamin Graham and being a student of his early on, and maybe a little bit of the entrepreneurial endeavors if you look deeper into Buffett's background. But there's actually something else. And it's something that people really don't talk about that drives Buffett's success as an investor from when he started invested to this point. And it's something that we're going to dive into a lot more here on this podcast. And more importantly, it's going to be something that you can utilize to make yourself a better investor. I'm not saying necessarily you're going to become Warren Buffett, but you are going to become better than what you are today. Welcome to the Championship Investing Podcast, where I teach you how to find your own winning playbook to win in the stock market. So get ready to stop investing like a fan and start investing more like a champion. Now, like maybe a lot of people, I caught the stock market bug back in college, and it's become its own obsession in the way I want to build wealth for myself and for my family in general. And just like any other person who wants to learn about investing, I have spent a lot of time over the years learning about Warren Buffett, learning about his approach, learning about value investing, the different quotes, reading some of the Berkshire Hathaway letters, even read some academic papers around him, Buffett's Alpha by EQR. Check that one out. But in general, wanted to be like him in terms of I want to have some measure of success picking individual stocks, just like he did. I mean, when in Rome, do as the Romans, right? The idea of like, hey, he does it in this particular way, so why won't I try to do it in a similar way? But just like other people who tried to follow in Buffett's footsteps, I found that I didn't really have the stomach or the temperament to do it, at least like how he does it, holding through, especially certain individual names and how he gets kind of concentrated in certain positions. I try to do that, especially in names I do have conviction in, and I struggle. Definitely struggled a lot. And if you ever felt like you don't have this stomach, you have this similar issue, and it's the reason why you feel behind on your wealth building goals overall. And then maybe even it carries over not just wealth building goals, but like certain elements of your life or certain career, ambitions. But you're not alone. This is a common thing. There's an element of you trying to copy somebody else, and you just don't have the makeup. There's something missing. But what if not having Buffett's temperament wasn't the issue? What if the issue was actually not knowing what made Buffett a one-of-a-kind investor in the first place? And what if every book, podcast, shareholder event, and video made about the Oracle of Omaha was always missing this one thing, the one thing that actually made him special, and the one secret to all of his success? Well, before we even touch on that, sticking to the advice that we believe about him, which are, mainly value investing principles, margin of safety in these sorts, has led to a lot of consistent underperformance by many professional investors. Now, here's the thing. I used to be an allocator. I used to be an institutional investor before my current role now as a professor. And I can tell you with full confidence that more than half of these professional investors, active investors, mutual fund investors, hedge funds, they're applying very similar value investing principles. They come from prestigious places like Columbia, Wharton, Harvard. And again, these are places that push value investing. Columbia has its own special program for it. Wharton has its own special program for it. And it's just a common way that people think about investing. And let's say, okay, maybe you deviate a little bit from Buffett, but you're still in that mode. You're still in that camp. So it can be somebody like a Bill Ackman, a Bill Miller, and maybe even a Michael Burry. Again, following, still in this value investing ilk. Slightly different versions, but they're still in the camp altogether. And then don't even get me started on retail investing performance, or shall I say underperformance. And that actually does worse on average than your typical professional investor. Now, don't get me wrong. Some of these investors are literally the antithesis of value investing in terms of these retail investors, and definitely on the YOLO life. Wall Street bets, and sometimes it feels a little bit more like a cult and a little bit of a disease. But hey, going about it in this way, they are maybe trying to find their own playbook, and it's just they might be a little bit too much on the extreme. They don't really know what they're doing, and then starts going down the elements of gambling. Now, I don't know about you, but I have felt some serious regret about my investment decisions in my life. And for me, it actually starts with NVIDIA. I remember just normal screening in 2017. I came across the company and picked up very quickly how special the company was. Even if I was looking at it mainly for the gaming side at that time, and thinking that Jensen Huang was a unique leader. I had these thoughts all the way back in 2017, even before AI was a thing. And yet, I did not have that Buffett-like stomach, that temperament to ride out the lows of NVIDIA. Leaving tens, honestly, probably hundreds of thousands of dollars on the table. But to this point. Hell, even in the midst of a low, back in May 2022, that's during the time I was graduating grad school. I was in DC. I was with one of my friends. Went out to dinner. I told him, hey, this is a great time to be buying NVIDIA. And he bought it then, and he held on from then to now. If you ask him about it, shout out to Brennan, I'm talking about you. You ask him about it, he brings it up like, hey, yeah, he had a great stock tip, and it was awesome. So how could he listen to my stock tip, and I'm the one who gets shaken out of the position later in 2022 and missed the initial uprise? How is that happening? Yeah, man, just this, and all this feeling of regret, just this constant feeling of regret, combined with me feeling like I'm behind financially. It's a terrible duo of emotions to feel. And these emotions only had me thinking, it has to be a better way. It has to be a better way. It has to be a better way to invest. It has to be a better way to go out and figure things out and actually have success investing and enjoy doing it and stay invested during the tougher times. I found that better way. Now, before I reveal the secret to Buffett's success, I want to tell you about the one book that changed the game and started me down this rabbit hole in the first place. Trading Basis by Joe Peta. I already know you've never heard of this book. Never really talked about it. It's one of those deep cuts. You might not even know who Joe Peta is. Even people within the institutional investing space don't even know who Joe Peta is. I randomly found him giving a podcast interview. I was actually looking for another one of my hedge fund friends at the time. He was on a podcast. He was a guest named William Hurd. I'll bring him up a little bit throughout all the podcasts I do. But in looking for his, I found Joe Peta as a guest on the same podcast. And it was talking about connecting baseball, his love for baseball and baseball analytics, and using ideas from that combined with using the things he learned as an equities trader at Lehman Brothers, the good side of Lehman Brothers, not the debt side, the equity side that was actually very profitable. Combining that to essentially build a sports betting hedge fund during the 2010s. Now he doesn't do that anymore, and you'll hear a lot more about his name over time. But it was the thing. This is when the idea to me that the lessons from one domain can be applied to another domain, because recognizing patterns and inefficiencies in one domain can carry over to another. So a domain that you really love, that could be your hobbies or something you have a deep interest in, or maybe even a prior life, or you started your career going down one rabbit hole, or one path, and you want to switch to another. There's lessons to learn from this path. So the first person I instantly thought about was Robert Smith. Now, here's the thing. For Robert Smith in particular, for those who know knows the backstory, and for myself personally, as a black man, I definitely see more as my investment goat. In fact, he's the one who inspired me to start sophisticated investing life in the first place. Just like Robert wanted to apply the best practices he learned as a technology investment banker for enterprise software companies, and you want to learn from the best there and apply it to a broader set, I wanted to share the best practices of what hedge funds do and give those to those who are really more serious about investing in the stock market. But I was missing something in Robert's backstory, something that didn't click initially. And the idea was his engineering background. Before Robert became a technology investment banker, he was an engineer. And being an engineer, he had the engineering mind, which allowed him to see those best practices in the first place. It's one of those things that could be, you can make a case of just hiding in plain sight, but for some reason he saw it. And he also had the conviction that he knew he saw something. And that's what pushed him further for Vista Equity Partners and all the success he's had in private equity. Now, there's some other stuff to the story, but that's not for me to be discussing right now. But after seeing this, paying more attention to Robert's backstory, I revisited the Buffett story, as well as Charlie Munger. By the way, in terms of this revisit, shout out to the Acquired Podcast as their first podcast on a 3-part podcast series on Berkshire Hathaway is where I first caught it. And it was when it really started to stick out. And you have to go back to when Buffett was a young lad, I think even before his teenage years. And tying this all together, the one domain and the other, what was Buffett's domain? Horse race betting. Yes, it's the horse race betting. That's the background. That's the element. Okay, sounds extreme, but this is the secret to Buffett's success. It always has been, and I don't even know if he truly knows that, why his mind works that way. But it's the secret, because there are a lot more connections between horse race betting and really any sports betting and investing in the stock market. Now, first lesson is just how the markets actually operate. Sports betting is a pari-mutuel game. Hopefully I'm saying that right. Meaning the actions of all bettors create a feedback loop that plays to the final odds and payouts. The stock market works in a similar fashion. This feedback loop in a sense. As the more investors that like a stock, the higher the prices rise to a point where now there are more people looking to sell at that higher price, leading to more sellers and buyers, and that leads to a price decline. And there's also this element of perception of buyers and sellers versus actual buying and selling. So it gets a little complicated, but that's the idea in general. That's why odds move after a certain amount of money has been pushed in one direction. It's the feedback loop. George Soros has this concept called reflexivity, and it's the exact same thing. It's just the feedback loop of the markets. Now, based on this understanding, the goal is to find bets where there's a gap between the odds of success and what's being priced in. That's the real goal. It's not to bet on the horse that you believe is going to win. It's betting on the horse where there is a heavy discount or people think there's no chance relative to what the actual probability is. And you want the widest gap. Now, once you define success as the likelihood of a company being able to produce cash, no matter circumstance, and think of valuation, or at least a valuation multiple, as the pricing of those odds, now you're seeing how Buffett actually invests. Now you're seeing the bigger picture. Okay, this is why the importance of cash flow, really sticks out to him, and why he fell in love with insurance companies. Okay, a lot of people like to start the Buffett piece with him being in college and, being a Geico shareholder or, looking at Grams and seeing how big, and that's how he got in insurance. No. The reason insurance stuck out is because he saw the gap. Look, here's the thing. Insurance, they're great at generating cash, no matter what's going to happen in the economy. But here's the thing. They're always priced negatively, probably because they're boring. Also because when you're talking about insurance, is it something you actually want to talk about or deal with? No. And the growth, a lot of times, is uncertain. But it doesn't matter. They're going to generate the cash. And then you have Buffett's Charlestown story. Some of his childhood was split, living in the Washington, D.C. area as his dad pursued a career in politics. So he's living in Maryland and will actually go down to Charlestown, West Virginia to bet on horses. That's where he'll go to bet on horses. He typically went with his high school golf coach. But one day he went by himself. And what a day it was. Because that day when he went by himself, he lost his very first bet he placed. No, he was extremely confident in the calculations. And unfortunately, he experienced the break-even effect, or the idea of trying to get back to breaking even after suffering your initial losses on your first bets by taking more risk. He kept betting until he lost $175. Now, that doesn't sound like much. That's like losing $2,000 today, and you're a kid, barely a teenager, barely in high school. So, a young Buffett learned the importance of not betting on every race and only waiting for the bets where he believed the odds were truly off. There was the widest gap, and that is when he's going to attack. And this is a significant lesson he's had throughout his entire career. Now, I am going to shout out somebody else called Finmasters, as I'll leave a link to their article discussing how value investing and horse race betting are similar, because I did utilize that as some research here. But after learning that about Buffett, I revisited the backstories of several investors that are well known. So think of Peter Lynch, think of Bill Ackman, Ken Griffin. You see them on the screen if you're able to see this in the video. And this is when I realized cross-domain expertise is the key. It's the key. This is the reason why they all saw something different that most people didn't see, and they had the conviction to follow through. Now, here's the thing. The real key is the focus on the domain that you care about. If you want to actually try to implement this in your life, focus on the domain that you care about and a domain where you recognize patterns before. You've actually seen things that other people have not seen. You might even have a few contrarian takes. Maybe a few hot takes, if you will. Now, do not take from this to start learning about sports betting or learning about poker. Rather, focus on things that you already care about or have a high interest in. Now, the point of this podcast is to help you get there if you know what your domain is, especially if it's related to sports. Because for me, it's going to be basketball. That's going to be my domain of choice. Basketball is my favorite sport. I like the way they dribble up and down the court. I'm going to pause for now. I fell in love with the game as a kid, and it was the second career path that I seriously thought about pursuing. And I was 13 years old, playing middle school basketball, thinking about how to break a 2-3 zone. It made me think, actually becoming a basketball coach would seem pretty cool. You'll learn about the first career path some other time. It's actually a funny story. You'll probably hear that on somebody else's podcast, but you'll learn about it in time. Now, if you're interested in learning how you can use sports to find your investment voice and not get scared out the stock market like I used to be, then join the waiting list for my hybrid coaching program, where I provide the structure and guidance you need to master the market in your own way. This includes tying in those hot takes, no matter the domain, tying them in, the strong opinions you have, those beliefs you have, and connecting it to investment philosophy that you don't even know you have. Because once you get that down, it helps build that conviction that you're seeing things even in the midst of maybe some underperformance or if we're in a bear market. Now, before I sign off, I'll give you a preview for the next episode, in which I will follow up by discussing how I finally figured out how to get off the roller coaster that just about every basketball player experiences at one point in time. Shooting. More specifically, being a confident shooter. It's a roller coaster we all experience. If you play basketball, you know what I mean. Especially in games where maybe you're just a little off and it throws off your confidence. But in figuring this aspect out, this will help me become a better investor. So until next time, stay invested, stay sophisticated.